Hi, and welcome to Wall Street Wrap-Up. I'm ANDRÉ LABORDE. Our goal is bringing Wall Street to your street for this day, Friday, February 5th, 2021. Our goal is to inform you of what's happened on Wall Street this week to get you better prepared for the events of next week. Well, in 2016, Gallup conducted a poll and found that 41% of the public said that they own stocks in either a mutual fund, an IRA, or a 401k. Well, by 2019, that number increased to 54%. And last year, in 2020, Gallup released numbers saying it grew to 55% of the public owning stocks in either one form or another. Now, that's a 14% increase in a 4-year period. You see, Wall Street is the home of New York Stock Exchange at 11 Wall Street, but the NASDAQ is located on West 42nd Street. And brokerage houses that buy and sell securities every day the market is open, well, they're headquartered and they're scattered all around Manhattan. Now, with the pandemic, in just 1 year, those same brokerage houses are expanding their headquarters outside of the New York area to where the people are, to the other 49 states. So when we refer to Wall Street, we're referring basically to capitalism itself, not just one particular street in Manhattan. They're referring to your 401k, to your IRA, to your savings account. Well, at this time, it doesn't reflect over all ethnic categories. A much larger portion of white people own stocks than other groups. But now, with the trading firms such as Robinhood and Charles Schwab, TD Ameritrade, as well as other brokerages not charging any commissions on stock trades, this will bring more people into the trading of stocks and investments and increasing ethnic groups that were once left out. And when I was thinking about the show this week, I was assuming that the Super Bowl, being Super Bowl weekend, the game would be the most important top story on everyone's mind. Well, I was wrong. And when we're wrong, we want to correct it right up front. Which brings us to Jamie Rogozinski. Now, if you haven't heard of Jamie, well, that's understandable. But what he has created, unless you've either just awoke from a 2-week coma or just been released from a federal prison, you've heard of GameStop and the frenzy that stock has occurred throughout the country. Now into its second week, GameStop, a company that only most video gamers knew because of playing in their room and they would only come out when their mother called them for dinner, it became a top story for the financial pages going into the mainstream media. And not only just the national non-financial news, but comedy shows as well. Even Saturday Night Live had a crack at it, and all the late-night talk show hosts. And in the last 10 days, even myself, between 25 or 30 friends of mine and family members have contacted me because they know I'm in finance and asked if I'm involved in GameStop. Well, my answer to all of them is yes, I am involved, and I am involved in what's going on. Well, the same way I watch a Sunday afternoon football game or watch a good movie as a spectator on the sidelines, maybe even with a bag of popcorn to enjoy the entertainment. But glad this time I'm not on the playing field and not getting financially bruised. You see, it was not that long ago when the short sellers were considered the Davids going against the Wall Street Goliaths who were long on the stock. But now it's a complete 180-degree polar opposite. The short sellers, the one-time rogues, well, they're now the elites. And the tech bloggers of Reddit and of WallStreetBets, well, they're getting the better of those Wall Street fat cats. Which brings us back to Jamie Rogozinski. He is the creator of Reddit's WallStreetBets. That was the sounding board that people logged onto, that the retail investor, the average guy, bought massively into GameStop. And I'm happy to say, Jamie, well, he joins us tonight. Jamie, welcome to the show. We're glad to have you.
Hi, thanks for having me here, Andre.
Well,
pleasure to be here.
Well, so how's it been, buddy, the last 2 weeks? How's your life been going?
Yeah, it's definitely been a little busier than usual. A lot of interviews and fielding a lot of messages from a lot of people that I hadn't heard of from in a very long time. But for the most part, just trying to continue about my daily life, my job, my family, my kids.
Well, I understand. Tell me a little bit about what happened. I mean, what made you decide to create WallStreetBets? Were you always in finance or enjoy finance?
I worked my way into finance. I studied economics and computer engineering. Very entrepreneurial spirit. Started a tech company out of college, but it was pretty successful with that. I sold that. But during that acquisition process, I realized there was a huge gap in my knowledge base when it came to finance. So, I kept going on my career, started studying finance, figuring that would help me bridge that gap and getting into the market. Turns out the type of things that I ended up doing with the market had nothing to do with finances. It's taught in schools. But I started in 2012. At the time, I'm single. I had a decent job that left me a disposable income with which I could use for investing in a way that was much more risky than is traditionally considered the correct way to approach the market. And there was a lack of spaces online where people were discussing high risk trades, these short term time horizon, quick in and out moves that obviously had a larger appetite for risk. So I created it, and obviously there was a lot of interest in that. It continued to grow throughout the years. Quite a bit, and obviously more towards the last few years.
Well, as in everything in life, timing is everything. I mean, because when you created WallStreetBets, then came, or around that time, Robinhood was started, which at one time, if you bought stocks, it would be the percentage of what you bought it. So you could buy 100 shares of stock and pay $35, $40 or more for your purchase of stocks for maybe just 100 shares. But now it's zero commissions, which brings the retail investor into the forefront. And they too can have a piece of Wall Street as well too. So your timing is good.
Yeah. Well, it's not only that. There's a whole lot of other things that come into play too. Since they came into the market, a lot of other players have as well. We've seen other tools that previously were either inexistent or inaccessible to retail traders or retail investors, which are things like fractional share purchases. These are shares that are really expensive. You don't have enough money to buy a share. You can buy a small portion of it. Stock options. Then you have an explosion of ETFs that allow you to not only invest in pretty much anything you could think of. You can also have leveraged ETFs. You can have inverse ETFs. You can get your hands on all sorts of things that typically were out of hand for an amateur trader.
Now, what year or when did you start WallStreetBets?
2012.
2012. And when you started it off, you had about how many people, like this, the first month or the first 6 months of when you started it?
Yeah, well, I started it with zero, right? Like it literally was just a new thing. So I started kind of telling people about this forum. I would go on different forums and I'd find people that were interested in discussing these higher risk approaches. So I tell them about this WallStreetBets thing. Within a couple of months, we had probably a few hundred users. Then by the end of the year, maybe 1,000 or two. It kind of kept doubling every year since then. Obviously, this last week has just grown. The subreddit has grown tremendously in style. Now I'm no longer actively moderating this subreddit. I stopped being involved with them in April of last year. But up until that point, every year it doubled in size, right? So obviously the gap from 500,000 to a million is 500,000 people versus 500 people to 1,000 people. It's only 500 people, but that rate of change has been pretty consistent.
Now, from what I understand, it's now over a couple of million people. Is that right?
Yeah. Last I saw, it was like 8 million.
Like 8 million. Okay. That's like 4 times more than the couple of million for doing that. Well, so when WallStreetBets started with posting on, let's buy GameStop, let's get the shorts, or how it started, was that about maybe 2 weeks ago, or was it earlier in January?
You have people making posts about all types of stocks for all time. There had been people talking about GameStop for as far back as I think September, probably even before then. But some of the high-profile individuals were talking about this back in September. I think the moment this news kind of really took off was, I think it was probably 2 weeks ago. This is when a lot of attention was starting to turn to this subject, and a lot of the people started trading these, both GameStop stocks as well as the stock options. And that's when you saw the price astronomically go up from like $30-something a share.
Yeah, I think the highest was like $460 a share for a stock that normally was trading at between $15 and $20 a share. It went up to $475, $480 a share about a week ago.
And that's probably regular trading hours. After hours, it made it up to $585.
Yeah. Okay. Well, this week alone, also, this week it came to, it was up like $15 to $17 today, or at least it ended this week up to around 60.
I'm not gonna lie, I did not open my brokerage.
Your mind is on so many different things, my friend, right now, especially with what's going on. But I think what took the nation by storm is that an army of retail investors, okay, the guy that was usually just, was maybe, people always thought of the institutional investors, BlackRock or Fidelity Investments, or those that would buy large blocks of stock. Those are the ones that the companies that would go after. They're the ones that companies would want to take them to dinner and to give them. Well, the army of retail investors with zero commission trading went after you could say the wolves of Wall Street. And I remember, like maybe about a year and a half ago, Bill Ackman, who has a hedge fund, he was shorting a company, and Carl Icahn was buying the same stock that Bill Ackman was shorting.
Yeah.
That's right. And it had made huge news, but those were the two big titans, and it was sort of like whoever got burned, it was okay because those guys, they had a lot more in reserves than the average guy. But this is where the retail investor was really giving it to the shorts, literally and figuratively, to the Wall Street, the hedge funds.
Yeah, absolutely. I mean, and I've made reference to that battle before, and it's not the first one. It's happened all the time, and it's entertaining to watch two large figures that are heavyweights on Wall Street go after at each other, have opposite sides of the bet, and one person trying to muscle the other one out. It's entertaining and it's interesting and it's fun to watch. Definitely, this is a different situation, and I think one in which the funds were underestimating the power of these individuals. They might have been able to brush them off or assume they weren't going to be able to collect enough power to do this, but because of the huge numbers and because of the composition of this, because of the tools they were using to make their bets with, they were very smart about using their money to squeeze this price up really, really high. And then so much so that Melvin Capital ended up needing to get rescued from them. It's definitely a story in which the individuals got together, they spoke up, and they were able to hit these firms where it hurts the most, which is their pocket.
Absolutely. Well, do you think they won't be able to put the toothpaste back in the tube? Now that the individual investor knows that they do, within a massive force, an army of retail investors, that now that if they see other hedge funds wanting to short stocks, or if they want to go after it, they know en masse they can do it, that this is just GameStop may be the first, but whether it be AMC Theater or Silver, as it was this week, that this could go on into the weeks ahead, to the months ahead, and maybe even into the near future?
I think from all my years with WallStreetBets, I've learned to stop trying to predict what they're going to do, right? This isn't an individual or a group of individuals. This is a collective, massive community where the rules are democratic. It's a social media construct where people put their ideas on the table, and based on popularity, based on likes, retweets, upvotes, whatever it might be, it gets a lot of attention. It is difficult to predict. Are they going to try to do it again? I believe they kind of try to do it again. If I were to guess, they're going to pull off some other stunt that nobody can predict. I don't think they're going to repeat this one. At least not nearly as successfully. Maybe they will, maybe they won't. But they've done so many things time and time again over the years. This last week definitely is the biggest event, certainly the highest profile event. But I think they're going to find other quote-unquote cheat codes to try and figure out a way to squeeze money. That's the approach of this particular group of participants. I don't want to call them investors, but they're participants, and they're not traders either because it's a different discipline. They're figuring out a way to game the stock market. They did it with GameStop. They've done it with other stocks in the past. Not short squeezes, not these delta hedging, gamma hedging, these really technical terms that go into it. They're constantly on the lookout for weaknesses, and they exploit them.
while you were talking and mentioning about doing it again, it reminded me of a saying. Mark Twain one time said, "History may not repeat itself, but it sure does rhyme." So I think you're right. I mean, now that this has been started and the individual retail investor knows that they can have a piece of the pie too, this may be going even further. Tell me a little bit about you. The last 10 days or so, were you contacted by regulators or hedge funds and saying, Jamie, what can you do to, is there anything you can do to stop this? Or were you contacted by anybody from Wall Street?
I was contacted by Andrew Left. He's the guy in charge of Citron Capital and the Citron research that were behind one of the most vocal short positions on GameStop. And that's where this rivalry had started, at least on a tit for tat online type of conversation. So he reached out to me after he was getting, obviously he knew what was going on with the stock that he was short, and he's got 20-something years experience in the market. He knows how to take a punch. He knows how to take a loss. But he was also being attacked personally, which made things a little bit uglier, definitely uglier than what I'd like to see the type of discourse that takes place. So he was just kind of calling for advice.
Was he involved with Melvin Capital? Because Melvin Capital was one of the largest short that took the biggest loss on this.
Yeah, Melvin Capital is the one that had the most public loss, at least, because they had to get rescued by a handful of other individuals. I didn't talk to him specifically about his position. I didn't really ask him. He'd come to really level with me. Mm-hmm. I think that I'm going to know as much as the next person that knows about this topic based off of what's written in the press.
I know, like most people, when they start to sweat, they start to figure out, okay, what can I do to cover my positions and such? And I guess whether it be at Melvin Capital, I'm sure it was a very uncomfortable time for them for 5 days ago until they reduced their positions and such. Well, tell me a little bit about you.
Yeah.
Well, now, how about,
what about me?
From what this has happened from 12 to 14 days ago till as we're talking right now, I understand you have a movie deal that you've just signed. Is that right?
That's correct. Yeah. I signed a deal with Rat Pack. That's led by Brett Ratner. And that was done earlier this week. I believe it was the beginning of the week that I signed the deal. I mean, this past week has definitely been different than usual week.
This is not your average week, or this isn't a normal February for you?
Definitely not a normal February. I got contacted by mostly a ton of press, a ton of people that are just congratulating and just really happy about the movement. They're really happy about everything that's taking place. I got contacted by all sorts of people that I imagine were going to try and get in touch with me. And on top of that, I have a day job, and so that's obviously my primary focus. So it's been an interesting week, but it's a news cycle. I'm anticipating that the news cycle will go away as they always do, and hopefully recover, or things will go back to normal.
Well, that's about when the movie will come out. Any ideas of who you'd like to play you?
I get that question all the time. I really need to come up with an answer for it, but no.
Go for say Tom Cruise or somebody like that. Or I don't even know who the hot star is these days, but aim for the top. I mean, you certainly made enough news and enough headway and everything that's going on for what's what. Jamie, I appreciate it.
Thank you.
I really appreciate it, and I'm happy for your success. Again, people who are watching has kind of had a feeling of it's kind of enjoyable to see the retail investor or the David going against the Goliath and saying that one man or one person can take on an institution. So it was appreciated.
Absolutely. Well, thank you very much for having me. It was a pleasure.
And congratulations and all the success to you. And I'm looking forward when the movie before the movie comes out. You want to come back on? I'd love to talk to you about it.
Absolutely. Thank you so much.
Thank you, Jamie. We appreciate it.
Take care.
Have a great night and a great weekend, too. Take care. Bye-bye.
Bye-bye.
Thanks a lot to Jamie. Well, in less than 48 hours from now, 2 professional football teams will take the field in Tampa, Florida, at Raymond James Stadium for Super Bowl 55. Now, you already probably knew that because of the hype. Because to most viewers, the Super Bowl, it's a football game. But to many, the Super Bowl, well, it's a business, and a huge one. Even the attendance this year will be reduced because of the pandemic. A stadium that normally holds 65,000 people, well, they'll only be allowed by the National Football League, the NFL, to hold 22,000. And 1/3 of those 22,000 tickets, well, they'll be given to first responders. That means 66% of Raymond James Stadium will be empty. Even the ads this year, they'll be different. Budweiser, for the first time in 37 years, have said that they will be withholding their ads along with Coca-Cola and with Pepsi. Now, not to worry, there's going to be still lots of companies with commercials hoping to put a smile on your face and even more, and hope you'll be talking about it tomorrow, well, tomorrow, Monday, and hopefully even Tuesday after the game, around the water cooler or the break room at your place of work. But the problem is now that a lot of people are quarantined and working from home. The break room, well, that's your own kitchen. And there won't be many people around your water cooler because it's in your house to discuss their product. Now, here's what the NFL may not be telling you. Companies are concerned because, in addition to a pandemic, the NFL has gotten political. And political means taking sides, and companies don't want to be in the middle of sides because both sides buy soap, both sides buy beer or automobiles or any other product. In 2017, the viewership of NFL games, which had always been going in an up direction, took the opposite course and actually started going down. It did regain some in 2018, but last year, in 2020, it started going south again. And even the gamblers were shedding tears. Well, okay, maybe not tears, but wagers on the Super Bowl are expected to drop 37% on Super Bowl Sunday due to a number of people now working from home and will not be involved in the always popular office pool. Yep, the office pool is going to be very much reduced. But plus, many will be watching not at parties as in past years, but at home, solo, or in the much reduced, relatively small groups. Well, on Monday, after the game, when the ratings come out, as we always say, time will tell. But first, how did the markets do this week? Well, the Dow Jones Industrial finished the week at 31,145. That was up 92 points for the day, and ending the week at 3.9%. And the S&P 500 closed at 3,887 points. That was up 15 points for the day and up 4.17% for the week. The Nasdaq closed at 13,856 points, up 43 points for the day and up 4.75% for the week. All the indexes posted record closes, and the Dow Jones, along with the S&P 500, posting the longest winning streaks since August of 2020. Now, also in the business news, companies are halfway complete in reporting their last quarter's earnings, and so far, they seem to be making the last quarter of 2020 a strong one. With 53% of the companies reporting, over 80% of those reported that they've beaten analyst estimates with a 17% increase in what analysts had expected. And their earnings per share was also up 1.6%. Goldman Sachs bankers stated that this week, quote, "We're still in the stages of a bull market." Well, Jeff Bezos has decided to step down as CEO of Amazon, the company he founded and went public in 1997. Bezos will be handing the CEO position over to Andy Jassy, who presently is in charge of Amazon's AWS for Amazon's Web Services. Jassy built AWS into a powerhouse and expanded Amazon's reach from selling products over the internet to holding 37% of the cloud business of other companies, including government agencies. And speaking of Jeff Bezos, he may now have two good reasons to leave Washington State. One is he's stepping down as CEO, as we said, of his company, Amazon.com. But the other is lawmakers in Washington State, where he resides, are now considering to impose a wealth tax on their residents. But this proposed wealth tax, you could say, is the Jeff Bezos, Bill Gates tax, because it only taxes billionaires of 1% over $1 billion. And 97% of the tax would be raised from just four people. That's Jeff Bezos, Bill Gates, Steve Ballmer, and Mackenzie Scott, who's Jeff Bezos' ex-wife. If Jeff Bezos does leave, analysts say, Washington state would lose about 1/3 of the proposed tax. And Bezos does have a number of homes scattered around the country, including a newly purchased ranch in Texas. Now, that means if he does move to Texas from Washington state, he would be moving to a state with no state income tax. In fact, he could even say howdy to his new neighbor, Elon Musk, who recently moved to Texas from California. Well, Apple Computers and Hyundai, Kia are in talks and seem to have been for quite some time. The collaboration would be for a fully autonomous electric vehicle. Now, the production of this Apple vehicle would be at Hyundai Kia's plant in West Point, Georgia, and a scheduled rollout in 2024 or possibly 2025. The hardware and software on this autonomous car would be in all Apple products. Last October, the chairman of Hyundai Kia, Chung-Yu Sun, stated, "Mobility as a service is the future." Well, not that Hyundai Kia will be stopped making cars. In fact, just the opposite. But if this is their belief, then Apple Computers would seem to be a very good fit. Hyundai's belief of the future with innovation fits very easily in Apple's playground. And Apple would be partnering with Hyundai, one of the top manufacturing automobiles. And that's not just in North America, but around the world. Now, this deal, if completed, would be a win for both companies. Apple has declined to comment on this report, and Apple closed this week at $136.76. That's up 2.3% for the week. eBay said during this past holiday and Christmas season that 1 out of every 10 shoppers bought something on eBay. Their fourth quarter was better than expected, and the company said that they will be instituting a buyback program of their stock. eBay ended the week at $62.23 a share, up 9.5% for the week. And PayPal released their fourth quarter earnings on Thursday and closed out its year as its strongest ever. It announced a 39% jump in total payment buys and adding 16 million new accounts in the fourth quarter. Now, in the last 12-month period, PayPal stock price is up over 120%. And PayPal ended this week at $269.44, up just short of a 13% increase. Well, that's our show. We hope you've enjoyed it for this Friday, February 5th, 2021. And we thank you for inviting us into your homes this evening. We'll be back next week. Remember, you can also follow us on Facebook and WYES.org. We thank you for joining us for Wall Street Wrap-Up. I'm ANDRÉ LABORDE. And remember, money never sleeps.